Know the difference with Annex Wealth Management? When COVID hit and the world changed, a number of people weighed their options and decided to retire early. For many, it worked out. For some, not so much, because as time went by and perhaps as reality and inflation set in, the decision was made to return to work. But what did that period of quote-unquote retirement do to their Social Security? That's what we're going to discuss with Eric Strom, Financial Planning Manager and a CFP at Annex Wealth Management. Hey, Eric.
Hi, Danny.
So we got a best case scenario and we got a second best case scenario. I'm going to guess that those who never filed for Social Security when they did their temporary retirement, they'd be the least impacted. In fact, not at all.
Yeah, that's right. Not only would there be no negative impact, but in fact, returning to work could potentially positively impact their benefit because remember, Danny, benefits are calculated by your highest 35 years of earnings. So if you're replacing some of those $0 years with actual work years, that could potentially increase your benefit. And in addition to that, if you have not yet taken your Social Security, then that gives you the chance to meet with a financial planner to potentially optimize the strategy, especially if you're married. That can have a big impact.
So if somebody took 6 months or a year off, you're still looking for the highest, right? So it wouldn't impact it so much.
Exactly, because that Social Security is calculated with the highest 35 years of earnings. So going back to work could help your benefit get even higher.
Okay, now, if somebody retired and they began taking Social Security, what are their options for returning to work?
Well, if someone has not yet reached their full retirement age, which is typically between age 66 and 67, unless you actually undo your benefit, there's something, Danny, called the earnings test. And in 2022, every dollar that you earn above $19,560, for every $2 above that, Social Security actually gets reduced by $1. So you actually can potentially lose some of your Social Security benefits if you earn too much when you're under that full retirement age.
But if you receive benefits, you don't have to pay those back, or what happens?
Work? Yeah, the way it works is you do your taxes, and then a little bit later, if you earned too much, you're going to get a letter in the mail saying your Social Security check is stopping. And they're going to stop it for long enough to recoup all the money that you lost to the earnings test.
Okay. You mentioned full retirement age. How does it work then?
Yes. So at that point, the earnings test actually goes away. So once you reach that full retirement age, you can earn as much as you want and you won't trigger that earnings test. However, the taxation of your Social Security depends on your other income. So going back to work could potentially increase the amount of Social Security that's subject to income tax.
And that is your second best scenario.
That's right.
Okay. Eric Strom, Financial Planning Manager and a CFP at Annex Wealth Management, talking about early retirees and the impact on Social Security if they return to work. That phrase, lose benefits, come into play. That sounds scary.
It does sound scary. We were talking about triggering that earnings test and actually losing benefits. But here's the good news. You don't lose it forever. If you actually end up triggering the earnings test, it can be a shock because suddenly that check will stop. However, when you reach that full retirement age, they actually pay that money back to you in the form of a slightly higher benefit every month moving forward. So the money is not lost forever. It's just delayed.
Talking about Social Security, slightly off topic. I think I know the answer, but with our clients, is there a standard age that they begin to take Social Security? Or is that well, it depends?
It does depend. Look nationwide. 1 out of every 3 Americans are taking their Social Security right at age 62. The next most common time that people take their benefit is right at that full retirement age. Now, when it comes to clients of Annex Wealth Management, it's a little more complicated because we're oftentimes doing a complex distribution, tax, and Social Security strategy. So it's very important to look under the hood a little bit and consider the details and come up with a strategy of when you want to take Social Security and why.
Don't want to share any secret sauce, but is that optimization, and that's what we do for our clients?
Yes, we actually have Social Security specialists on staff. Now, believe it or not, Danny, there are courses that you can take on Social Security. So we have CFPs here at Annex who have gone through, believe it or not, these classes just specifically about Social Security, which is pretty complicated. We also use 2 different software planning packages that have pretty charts and they calculate break-even analysis, and then we meld that into a client's financial plan to make the ultimate decision.
Ladies and gentlemen, here's the good news. You don't have to take that course. We've got people that love doing things like that.
We really do love it.
For investment, retirement planning, tax planning, and estate planning, we do it as a fee-only fiduciary. Know the difference. Website, annexwealth.com. Click that Get Started button. Eric Strom is Financial Planning Manager and a CFP at Annex Wealth Management. Always appreciate your insight.
Thank you, Danny.